Welcome back. The stock of the day so far in the F&O space definitely has been Tata Chemicals, and we have with us the management, and this is on the back of the Tata Group's plan to invest about 13,000 crore rupees in a lithium-ion battery unit in Gujarat. The belief is that maybe Tata Chemicals could supply inputs for this production. So to discuss the opportunity and the outlook, we are joined by R Mukundan, and we also have Sonal joining in to take us through this conversation. Thanks a lot, Mr. Mukundan, for joining in. I mean, before I hand it over to Sonal, the first question is just that this deal that the Tata Group has signed, will Tata Chemical in any way partake in that, supply some parts?
Thank you so much. I think really I just wanted to clarify the group has the company which has signed the MOU with Gujarat government is Agartha's Energy System Solutions Limited. It is a Tata Group company. Certainly to the extent that if there is any opportunities there, we will examine it on its merits, and they would also examine their supply base on their merits. I think that goes without saying. As of now, as far as we are concerned, a large part of our growth of our current core chemicals actually comes from the growth of two sustainability vectors. One is the solar glass, the other one is lithium carbonate, and we have highlighted a large part of our growth agenda, not just in India, because many of these chemicals actually are processed outside of India today, especially in South America and in Australia. The lithium carbonate, for 1 ton of that, you need about 2 tons of soda ash. So clearly, as the world pivots towards sustainability, I think we have opportunities which are even in the current core, and added to that will be other chemicals which would come into play, and that's one of the broad themes which we are working towards.
Okay. Mr. Mukundan, just to follow up on that, because there have been times I think by FY21, you did have plans to enter the lithium battery space as well. And since then, you've been actually quiet in that one. So are there any plans to forward integrate here? You spoke about how there is soda ash demand for lithium carbonate. Will you look at manufacturing something here? And with this particular order or with this particular investment that has come about for Tata Motors, will it benefit you? Because now soda ash demand will also go higher.
Yeah, broadly, I think if you look at the trend in India, and when I look at auto sector itself on a broader space, the addition of capacity which all the manufacturers are doing. If you have seen the announcement by the largest manufacturer in India, they're taking their capacity to 3.5 million vehicles. And overall, if you assume that India's demand will be about 7 million vehicles, I think we are talking about the overall the auto sector demand being very, very vibrant. A large part of our supply actually goes into auto glass, wherein soda ash plays a key role. In addition to that, I think as a proportion of this 7 million, I think a large proportion of that will pivot towards EV vehicles, and that is going to be a process which is going to be a normal trend. And for every vehicle where we are having a EV, you need lithium carbonate, and our product plays into that. And whether it be made in India or supplied from somewhere, I think those are all questions. We will address them as specific opportunities arise. But as we speak, even with the current play, we have contracts with lithium carbonate suppliers in South America and other parts of the world. So they do feed into the supply chain. So we are today probably tier 3, not even tier 2, which means we are not the suppliers to the battery manufacturer, but we are suppliers to suppliers of battery manufacturer. That's where we are. And if any opportunity does arise, we will certainly work towards that.
Mr. Mukundan, good morning. I just had a follow-up here. Can you give us a sense of how this EV space is shaping up? Because you are suppliers to suppliers of battery manufacturers. And, you know, there were large plans, very ambitious plans that the government had with the electric vehicle rollout. But there are a lot of challenges, especially in EV two-wheelers with respect to costing, charging infrastructure, battery management, etc., battery development rather. Where are we in that process right now? And for Tata Chemicals particularly, you have a big capex plan lined up as well. 800 crores by FY24 is the incremental capex. Can you tell us a little bit about that?
Sure. I think if you look at the trend, I think we do believe that the trend around the world, not just in India, I think is accelerating towards more sustainable mobility solutions. And EV would, lithium battery solutions will play a role, hydrogen will play a role. So there are multiple chemicals which will come into play. And I think companies are pivoting to being a supplier of choice in these sort of opportunities. These are early stages, as someone has said, and but the trend is increasingly going to accelerate, and it's going to exponentially grow. And I think we do believe that we need to continue to engage with the space to look at the positive opportunities which come. In terms of the growth itself, if you look at our investment, we are adding up the 200,000 tons of capacity in India is getting commissioned. Additional 300,000 ton is in the process of design. So 500,000 ton will be within India. About 100,000 will be in Kenya and another 400,000 tons in US. So all in all, work is ongoing in terms of 1 million ton additional capacity on our current capacity of 4.2 million tons. So we will be upping the capacity by about 25% in soda ash. In other products also, there's similar growth trend. So overall, we do believe a ongoing capex of about 2,000 odd crores, of which let's say 500 to 600 would be the sustenance capex, and about 1,500 crores would be about the growth capex. And this may vary from year to year depending on which year it peaks. I'm taking an average. Sure. I think this is an ongoing effort. And some of it would also play into new products like silica, which goes into tires. And these are tire products which will be for green tires, which are getting branded where bit of a carbon black is going to get replaced with silica. So most of the products we are entering are all playing into this whole sustainability. Sure. And our plans are pretty much as they were on the drawing, as we had explained a couple of quarters ago.
Sure. So what about geographical growth? Because you all have indicated that China reopening or, starting to kick off in terms of growth would probably be a big opportunity. US and UK, you've seen contracts kick off. So if you had to qualify geographically where exactly the opportunity would be in FY24, what would it be, and by how much are you expecting these geographies to probably grow?
Yeah, the broad point is of the world growth, India is going to continue to provide a large part of that growth. So we do believe that growth in India will drive multiple opportunities for us. In addition to that, US has become a very competitive place to produce, and this whole what I would call as global supply chain rebalancing is probably playing out positively towards some bit of nearshoring within US, as well as India to play a role in this transition as we speak. So we are focused on these two geographies, and the other two, which is Africa and Europe, that while we have operations there, they're going to play a relatively lesser role in a large part of our growth. Momentum is going to be centered around India and US.
Okay, so Mr. Mukundan, two-part question here. One on soda ash, since you're saying the EV space is booming and more soda ash will be required there as well. How is demand right now? Because you have taken some price cuts in last couple of months. Was it because of oversupply or lesser demand? One is that. And second is, here we are talking about Tata Group getting into batteries. That would mean more offtake from your company itself. How much more would it be? The capacity expansion that you spoke about, is that enough, or will you need more here?
So in terms of the overall demand-supply situation, I think what has really happened is the demand growth in most part of the world has panned out exactly as we thought and as we anticipated. But certainly there have been a bit of hiccup in China. I think the whole issue in terms of demand-supply, slight imbalance, which has come about in the short term, immediate short term, has been because of the slightly muted demand post-reopening in China than what one would have anticipated. We do hope by 12 to 18 months that should correct itself. But that has meant that there's been a bit of a supply overhang, especially in that very concentrated market around Far East and Southeast Asia. And that has a spillover effect into India at some point of time. The second trend which has been playing out has been the sharp fall in freight markets. That has certainly made our costs lower, but also it has meant that the imports are able to arrive at much, let's say, it's a lower number. And overall, the energy costs have also come down. So there is while margins, I would say, more or less would remain range bound. The prices, as you mentioned, within India have been corrected. We have an exposure of about 800,000 tons out of 4 million tons within India. The balance, I think, is more or less steady. Europe prices are holding. North and South America prices are holding, and most of the markets we supply, other than Asia and within more particular India, I think where corrections have happened. But these corrections also are offset partly by cost benefits which have flowed into most manufacturers.
Right, Mr. Mukundan, but we're still not any wiser about how much more soda ash would be given towards the lithium-ion batteries. Just wanted to understand how much comes.
We had already guided that the demand of soda ash will continue to clip at anywhere between 3 to 5% and an average of 4%, of which the fastest growing segment will remain the solar glass and lithium carbonate, which will grow between 6 to 8% year on year. And I think that those growth trends are completely as per our plan, and they are ongoing. For example, India is going to be, in this current year itself, 3 more glass lines are going to get commissioned. Worldwide, more lithium capacity is coming on stream to supply to these, and these capacities are coming on stream in South America and in Australia. So we will have to supply into those supply bases of the world.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Tata Chemicals. The stock is buzzing around, up around 4%. There seems to be an opportunity at hand with regards to the Tata Group's plan to invest over close to around 13,000 odd crores in lithium-ion battery unit in Gujarat. I assume, Sonia, it's going to be Tata Motors, which is probably going to benefit as well.
Oh, absolutely. I mean, a lot of issues, for them. They're anyway market leaders in this space. Now they'll have no supply constraints. The costs will go down for them, and it will help them retain their market leadership, because battery is the biggest cost and the biggest, kind of like a supply side issue that EVs face. So these two things will be sorted, cost and supply side issue, that will help them operationally for sure.
Okay, all right. So that's Tata Chemicals as well as Tata Motors, which are buzzing around. Need to take a short break, but up next we'll tell you more about the markets. A lot of stocks in focus. Stay tuned.